Hello, welcome to our cash flow journey. I am Dewan, and we are back with another video. We've been getting a lot of questions in person from friends and family. What can you do with a line of credit? And I wanted to go over that because that is a great question. I know we've been mainly talking about paying off debt and doing velocity banking with a line of credit, but I'm going to talk about some more details about what you can do with the line of credit. So let's get into it. Most people think of a line of credit for just using for emergencies. I gave an example of the other day our dryer went out and I needed to pay some money to get our dryer fixed. And I used our line of credit to pay for that emergency. Boom, it's done. But there is more. What if a line of credit could be your most powerful wealth building tool? And so I'm going to go over that. And so, yes, like I said, you can use a line of credit for debt payoff. You could pay off your high interest debt faster, roll multiple payments into one. Uh, let's say you got a payment for this loan. You could take that money from the line of credit, pay off that loan, free up that cash flow, and then move it over to line of credit. Do velocity banking, save thousands of dollars of interest using velocity banking strategy. And what you just did is you freed up monthly cash flow from that potential loan that you just paid off. That payment's gone down, and now you're just doing velocity banking in your line of credit. So that's the debt payoff strategy that you can use with line of credit. So the other side of the equation. So I have a lot of friends that says, "Hey, Dewan, I don't have a lot of debt. My house is almost paid off. I don't have a lot of debt. I don't. My cars are paid off. I pay my credit card every month. Why would I get into a line of credit? What's the benefits?" And I tell them, like, wait, hold up. There's another side of the equation. You could buy cash flowing assets with your line of credit. You could turn that debt tool into a wealth building tool. And so what you'll do is you'll borrow from the line of credit at a very low cost, and then you would invest into assets that pay you cash flow each and every month. And the great part about it is you could take that money from the asset, put it back on the line, and then pay that line off doing velocity banking with your income and that cash flow from that asset. And then the great part about a line of credit, you can reuse it over and over and again, and your line of credit becomes reusable. And that tool, once you pay it down, so you chunk, buy an asset, it cash flows, pay the line back, do velocity banking, and then now you're ready to chunk again when that balance is paid down. So that's the cool part about a line of credit and buying cash flowing assets. And so I wanted to give you some examples. Most people think of just real estate. I can buy a property, take a chunk, buy a property, put 20% down, or buy the whole property and then pay my line of credit down. But there's some other things. One that's really piqued my interest is dividend EFTs. I have been researching those like crazy. I am on Blossom at our cash flow journey. If you want to follow us on Blossom, a great social media for investors. But dividend EFTs, you get money from just holding those, and they pay you uh, cash flow just by holding those assets. Another one is rental property, of course. That's more of a long-term strategy. You could do Airbnbs, which is a short-term rental strategy. Now we're getting to businesses. You could buy vending machines. You could buy ATMs. You're buying an asset that's going to cash flow back to you. You could buy a small business. Let's say someone is trying to sell their business. You could buy that small business, take it over. It's a cash flowing business. You could buy a franchise. I have several franchises I really like, and it's definitely kind of intrigued me to potentially buy a franchise. They give you the blueprint of how the business works, and then that also cash flows. And then now we're getting to the side hustles. You can use your car for Turo. You got this asset, this car, and then it's cash flowing back to you. You can do ride sharing. Let's say you bought some equipment and then you rent that equipment out. I've heard of people buying trailers and renting those out, and then that cash flows back to you. That's an asset. So now we're going to go through example, borrowing cost example. Why velocity banking works so well. And I get so excited when I'm talking about velocity banking. On this side, we got a loan, $20,000 personal loan, 10% APR, and a 5-year term. On the other side of the equation, we got a line of credit, $20,000, 10% APR, using the velocity banking strategy, $1,000 a month, positive cash flow. So which one will win? What do you think? On the left side, we have the loan. You have a monthly payment of around $425 a month. You are in that payment for 5 years, 60 months. Total interest paid over the 60 months, $5,496. Total repayment, $25,496. Loans are not flexible. Let's say you sent an extra payment to that loan. Yes, that will help with your interest. But the problem is that does not free up cash flow. That does not help you in any kind of way until that loan is zero. So you're stuck for 5 years essentially with that loan. On the right side, we have the line of credit. Doing velocity banking, we took $20,000 chunk from a line of credit. The first month interest is only $167 that we have to pay on that $20,000. And the great part about a line of credit is the interest declines each month as we put in our income, as we put in our cash flow on that line of credit. The interest is getting slashed each month. And guess what? We wasn't in debt for 5 years. Like in the loan example, we paid it off in 20 months, less than 2 years. So that is incredible. And how much interest did we pay? What was our total interest paid? We paid about $1,700. And so we brought $20,000, paid back $21,700, way better than the loan. So the line of credit paid off in less than 2 years with only $1,700 in interest, saving us nearly $3,800 compared to the loan. Loans are bad. Lines of credit is where you want to be. So if you had $20,000 available to you on a line of credit, what would you invest in first? Let us know in the comments below. We would love to hear your strategies and your comments. Like I said, I'm looking at EFTs. Let me know if you're looking at EFTs. Like, subscribe for more strategies. Our cash flow journey. Thank you. I appreciate it. Have a good night.